Hello and welcome to today's virtual Coffee Talk webinar. My name is Margaret and I will be the web host today. We have a few housekeeping announcements and then I will introduce our speakers. In order to earn CPE credit for today's session, please stay connected for the webcast for the entire program and participate by responding to at least 3 of the 4 questions. There will be a course evaluation which will open in a new window upon exiting the webcast at the end of the program. And with that, I will introduce our speakers. Kevin Jacobs is a managing director with Alvarez & Marsal Tax in Washington, D.C. and the National Tax Office practice leader. He brings more than 15 years of experience in tax matters in both the public and private sector. Joe Boddicker is counsel in the Federal and International Tax Group. He focuses his practice on federal, international tax, and legislative and public policy matters. Before joining Alston & Bird, Joe served as a law clerk for the U.S. Tax Court and tax counsel for the U.S. Senate Finance Committee, as well as 3 U.S. senators. Congressman Earl Pomeroy served as North Dakota's at-large U.S. representative from 1993 to 2011. In 2011, he joined Alston & Bird, where he works on the firm's legislative and public policy group. Finally, Nate Jones is a lead product manager with Wolters, Kluwer Tax and Accounting. He will be showing us today how to find additional answers and resources within CCH Answer Connect. Kevin, take it away.
Great, thanks. And thanks everyone for joining us for what seems to be a rehashing but a surprising outcome associated with the election. We had our last virtual coffee talk where we said, well, these are the probable outcomes, right? And guess what? The most probable outcomes didn't come to fruition as we now have a Republican sweep. We're going to talk about the enacting partisan tax legislation and the tax reform and tax regulations, but let's just get right into it. This is all red, right? I mean, the Republicans have now won. Trump is the president. We have a Republican Senate. I think last night they called another House race for the Republicans, so it's now 219. The governor's is even red. Joe, Earl, when we last spoke, right? I mean, this wasn't one of the more likely scenarios that it was going to be a clean sweep. What does this sort of tell us? Was it sort of I don't want to say the polling was wrong, but did the Democrats run potentially off of the wrong platform? Was it sort of this is now an edict of what Trump is saying? Like, what should we be anticipating on a going forward basis? Is it the other side did something wrong or the Republicans did something right?
Yeah, that's a very interesting. Well, Earl, do you want to take that first? You've actually brought in multiple races, so I'd be curious to hear your thoughts. But I can add what I want, and I should add actually.
I've won and lost more than you have, Joe. So I guess I'm qualified to speak on it. But please join in. We're still processing this, and I'm glad you referenced that slide we used, only a couple of weeks ago, that did run through the scenarios. And man, about the first 3 or 4 had some version of divided government. We're going to have at least one of the houses held by one of the other parties to the party taking control in the White House. And as of that call, I thought we had an even odds chance of that party coming into the White House being the Democrat. We were wrong. We were just flat out wrong. This was a decisive victory for Donald Trump. Now, he carried all 7 battleground states, these critical states that were going to make the difference. He carried them narrowly. So that has to be acknowledged. It still is a 50-50 nation. But in a free and fair election, no malarkey about, this being rigged in some way, that's one very positive, I think, on a bipartisan basis. Everyone can agree. Thank goodness we're not testing the legitimacy of the election itself this time. So that one is resolved. Indeed, Donald Trump's pulled something off here that really is one for the history books. Second guy in the history of the country to come back to the White House in a non-consecutive way. Grover Cleveland being the last one. So this would go a long ways back to see someone pull off what Donald Trump pulled off. He also did something that creates the legislative opportunity we're going to be talking about today, because he has majorities in the House and the Senate. Usually, and he has that as a returning president. Usually, you'll have a new president, they'll have swept the nation to some fashion, and you'll have the party aligned with control of the House and the Senate. Usually, that goodwill is exhausted within a mere 2 years. Ronald Reagan, just for an example, never did have that level of consolidated control. He was able to work the first 2 years working with conservative Southern Democrats that are all now kind of considered part of the Republican Party. But for the rest of his time, he had different control. Even someone as politically gifted as Ronald Reagan didn't pull this off. Obama, as we know, after the first 2 years, he had hostile Congresses for the rest of his term, and this is so did Clinton. This is really how it has worked. So you have a crew coming back. They've been in the White House. They know the levers of power, and they've got aligned political control. You got to go again back to Bush in 2004 and Jimmy Carter, although that was a different era in terms of how politics worked in our country in light of the back then, the conservative Democrats I mentioned earlier. So he's coming in with ready to roll in a way that's quite politically unusual. Now, even though, let's face it, some of the early nomination activity is untidy. It's about the nicest word I can find for it. But I don't think one should be confused about whether the state of their program and ambition. They're coming back. They know how the place works more or less. They have aligned political control, and we're going to see some things pretty quickly. Joe?
Yeah, I think you hit the nail on the head. A couple of things I would add, I just think that are helpful to keep in mind is one, looking at those margins, right? The task in the House is going to be more difficult than it was in 2017, right? So ultimately, they have, if they had another 20 plus seats potentially to buffer things, and there were a number of Republicans who voted against both the budget resolution related to TCJA, but as well as the underlying legislation. Senate, the task is slightly easier, right? You have 53 seats, but I think the lesson to be learned is ultimately people, I think, vote with their wallets, right? And they vote based on the economic security they feel, and that is first and foremost. And I think to the extent voters are not feeling comfortable with their own personal situations, they generally vote for change. And I think that would be the only takeaway here. I don't know. It is a mandate, but and we can get into the key influencers of policy here. But I do think we'll see something happen now. It's almost certain. It's just a very threading the needle is going to be quite difficult. And so I think this also plays into our timing considerations, right? And how that's going to work.
And it's sort of interesting. I mean, a few things to obviously note. I mean, right now you see all the infighting, right? Because we're all in D.C. as far as like, where do the Democrats go, right? There's not a next person up. And so that's sort of going to be interesting to see how the Democrats try to think through their approach to the elections in 2 years. To your point, what we've seen in the past, right, is even if a party is in control, it's no longer it's no longer politics as usual, right? It used to be in the good old days that whatever party was in control, they got whipped good, and everyone stayed in line, right? I mean, and when you compare it to like the Democrats and Republicans, like Pelosi knew how to whip the Democrats in line and get votes, right? I mean, that's just like the reputation, and we saw it. The Republicans have had difficulties on that, right? And it's going to be very interesting to see what Johnson's able to do in the House, especially with yes, it's getting a little bit bigger. There might be a little bit more breathing room, but it's not going to be much. Any single person can stop anything, right? I mean, we saw Manchin do that to Biden's, desires. So, we do have these potential influencers on tax policy. I mean, the one thing that I want to note, right, is, so I was actually in the IRS when TCJA was going on, so I was interacting with Congress and with Treasury and whatnot. And the key takeaway I have from both being like somewhat of an insider, but also like an outsider is the thing that Earl said, which is I think Trump has learned lessons from his first administration. There were things that, like at the outset, he had grand ideas that he wasn't able to implement because he wasn't sure how things are run. You can see, irrespective of what you think of the people he's nominating, right? He's trying to hit the ground running, and he's not planning to stop. And so, from a more efficient standpoint of whatever he wants to accomplish, again, whether or not you support or don't support the policies, it seems like we're seeing that. And it's going to be, I guess, the most interesting thing, without naming names, right, is how much any of the Republicans are going to step up and sort of say no, right? I mean, we've had the most recent.
Let's first talk about. Let's talk about them saying yes, because I think you can look at there's a whole lot of autopsies going on about the Democrats' failed effort. But really, you know, we had a president that hadn't been above 43% since the fourth quarter of his first year, mired in the low 40s. That's a prescription for losing. And I'll tell you personally, I believe this election was lost 2 years ago when Joe Biden decided to run again, and we really didn't have the ability to stop that. The die was cast, and there was a tremendous discontent, like as evidenced by low approval ratings like that, to come up with a winning race. Now, Donald Trump's astonishing ability to consolidate control within the Republican Party, I think that's one of the great stories of this election. I mean, who knew the guy could wage a comeback so effectively and really utterly dominate the party? Well, and then within that effort, we've got people that are pretty darn sure it has the potential to be a winning effort in the presidential. And they've been working on this for some time. My own view is when Democrats consolidate control after an election, they do something on health care and often pay some dues for it. I went to the private sector after the Affordable Care Act, for example. Republicans cut taxes. They cut taxes, even if they just cut taxes. Tax cuts are going to be first on the agenda, and you're seeing it here with, of course, you've got the Tax Cut and Jobs Act with the expiring provisions in 25, really putting some calendar urgency on doing it. But to sum up, I felt that the Republican strategists would have known they had a darn good chance to win this election, polls notwithstanding. And I think they've got a universe of think tanks and experts that have been thinking about how to do this, and now it's go time. Now, we know that nothing is entirely, as I mentioned earlier, tidy about a Trump presidency. But I do think that when it comes to taxes, they'll have a well-defined priority plan, and it's just an impossible governing situation with margin of 3 or margin of 5. But if there's anything that's core party orthodoxy anymore, it's tax cuts. So I think that you bring all of the Republicans home on a tax cut package, unless you get too nuts with it, and the stage is set for them to have a Tax Cut and Jobs Act extension at least, and pretty early in the year. That's my bet. Joe, you've got a slightly different view in terms of how long this is going to take.
Well, before we get there, right? Let's go to the first polling question, which is what is the most likely timing for tax legislation and the effective date? So we'll see what the audience thinks. So we're going to hold them in. Now, while we're doing that, I do want to note, there is another aspect that we're not fully talking about, right? Because we're focusing on tax legislation, and one of the other pieces that Trump is touting is the ability to have tariffs on all sorts of goods. Now, when you look at the history of that, there's always that question of, well, can Trump do this, or does he need legislative grace to in order to impose tariffs? And I think that there's two different provisions that are key, and Trump did use both of them, right? I mean, There's the Trade Expansion Act of 1962. That's what he used in order to impose the tariffs on steel and aluminum. In order to do that, in essence, you need to say that the imports are found to threaten national security. And obviously, it's a determination made by people that he's putting in place. So you can imagine you may not get as much pushback. And then the other one is the Trade Act of 1974, and that's where it's to counteract unfair trade practices, and that's what he used for Chinese goods. And in fact, I think there's a recent finalization of the Section 301 study on that. And so as a result, even just thinking through on the tax side, we have all this legislation, what's going to happen. It's going to be interesting. I'm going to sort of change the question of how quickly do you think we might see presidential imposed tariffs coming out of the White House? And, obviously the next question that we don't know is how will the countries that are going to be under those tariffs respond, right? In the sense of, are we thinking we're going to have an immediate trade war? Or are they going to respond with counteracting tariffs? Have they already built it in saying, well, Trump is president, this is what we're anticipating, it's the price of Trump being in the White House? Where do we go? So Joe, I'm going to hijack the question Earl asked you for a totally different one, and we're going to then come back to your views on what people think.
Yeah, that's a very good question, Kevin. On tariffs specifically, the authorities you mentioned, 232 and 301 tariffs seem like they're going to be utilized again. I think the big question here is, how do we translate tariffs into things where Republican lawmakers can take credit for some of the money being brought in, right? And there's some question as to the extent these tariffs and the authority to implement tariffs has been allocated to the president, right, delegated to him, and instead of Congress itself acting. Are those tariffs ones that count for scoring purposes, versus are there tariffs that they're going to need to enact in statute so that they can then use the money raised by those tariffs as estimated by JCT and CBO to offset some of this? So I think that's just the level set. I think the question here is, do you think the president's going to act, and will he act quickly with tariffs? Yeah, and in fact, I mean, if we saw anything, right, the Biden administration carried forward a lot of the 301 tariffs, and so many of them are already in place, and so I think Trump will be able to build from that. So it's going back to some of those other lists that they didn't reach, right, and seeing if there's a political will to impose some of them. So it'll be interesting to see. And then there's, on the tariff point, and not to dwell on this because we're going to be talking about OECD later, right? But then there's the question is, there's tariffs to address unfair trade practices, and then there's tariffs either to retaliate against other countries who are imposing discriminatory taxes on U.S. companies, or taking potentially, and this is often something discussed, will President-elect Trump use his authority under Section 891 to levy double tax rates on individuals from problematic countries where they're discriminating against Americans? It's another thing that's often thrown around, but we'll save that for later. But I think there's sort of two aspects of tariffs that we need to keep in mind. It's tariffs to address unfair trade, and tariffs that may result from our withdrawal or non-compliance with the OECD agreement.
No, that's great and very helpful. And just to note, that was in part in response to a question we got from the audience. So please, for the audience, continue to submit your questions. We look forward to it. And I guess
I'd like to just add a couple words on this. Trump will want to. He promised tariffs. Tariffs was an important part of his global plan to defend the American economy. Would like to do that quickly. He's got under existing statutes some unilateral authorities in this area. However, as Joe mentioned, and this is when I learned I was working with a Senate Finance Committee alum, because he told, if Trump advances the tariffs, it doesn't, the revenue generated doesn't count as an offset to the tax cuts that they want. If they pass it in statute, then that can be scorable savings to the extent they project you're going to have tariff revenue. You could, cut taxes to that extent and not have an impact on the budget. So there will be a bit of a push-pull. He'll want to immediately slam these things into place. And I don't know if he could get the vote through Congress in any event. But if he could get it through Congress, that would be better for him. It would help him build a bigger tax bill without further consequence on the scorable consequence on the deficit.
Well, query whether or not it could be a bait and switch in the sense of the president, Trump, imposes the tariffs as they're continuing to work on the tax legislation. They build in those tariffs. He then rescinds the presidential tariffs because the scoring is as of that moment. And so if the presidential tariffs are in effect, the time it takes to unwind, and then they'll say, here's my legislation, they already can revenue project. But just turning to where we are on tax reform, just for a moment, we've talked about this before. We have the TCJA provisions begin to lapse. We now have some of the jurisdictions implementing OECD Pillar 2. Pillar 1 and the digital sales tax, other countries have started doing that as well. We have like the funding expiring. We'll talk to that hopefully towards the end. We have the debt limit. The new Congress convenes. The Green Book is always a fun thing you see on this slide because Trump and the first administration never put one out. And so you have all these questions. So Joe, I'll give you a heads up of where people are on the audience. About 49% have said that they're anticipating enactment of TCJA before June 30th, but they're now split as to the effective date of that. Is it going to be delayed to 2026, or is it going to be retroactive potentially to 2025? So where are you as far as what do you think from a timing perspective on tax reform?
Yeah, this is a very helpful chart. The thing I like to keep in mind here, and you have some of these key dates in bold, right? We have funding expires December 20th. At this point, early on there was some thought they might try to kick the can down the road, but kick it down far enough to create room to work on a tax bill, right? Meaning, can we get some sort of funding in place through the rest of the fiscal year? It seems at this point that that's not going to be a possibility, and maybe things change, but more often than not, what we're hearing is potentially a short-term funding extension, right? That might get us into March, right? And then you have, looking at the 25, new Congress convenes January 3rd. That means hearings on anticipated presidential nominees may begin. At the same time, those nominations can't be officially transmitted until January 20th, which means they can't actually be voted on before then, right? Which now we're having this situation where we have all these key, very important, high-ranking positions. You had some of them listed that need to get in place and soon for the government to function properly. The Senate, as everyone knows, is a very slow body, and so it needs to process those, somehow figure out how to fund the government, and then yet also maintain room in the first 100 plus days of the administration to do tax legislation. I think the way things are looking right now, the Congress is jamming itself up so much that even if they try their hardest, it's going to be very hard to get a bill done in the first half of the year. I think the way things are heading, it's more likely than not that they ultimately are looking more towards getting something done by the end of the year. And then to your question, Kevin, when's the effective date? I think depending on which you have the sort of pre-24, right? We've already seen a lot of these business provisions begin to lapse. I think people would like realistically for at least for the years that were covered by the Wyden-Smith deal to also be covered, but I just don't think there's going to be money there, right? And so ultimately it's going to be a tough decision. I think should things actually go to the end of or through the end of 25, we could very well see an effective date beginning the following year. But I know that there will be interests lobbying hard, trying to, or at least for a few key provisions, move those dates. And ultimately, that will be, a member level decision because if anything, it's going to come down to the cost, right? And that's just, they're going to have to agree to that. And based on what they agree to, that will inform the effective dates. Earl, do you agree with that?
Let's go with worst. I said let's go with worst case scenario. This takes a long time, and you've got the tax cuts expiring. Well, there's an old IRS hand, Kevin. You're going to hate this, but they would make it retroactive, and so retroactivity holds out there just in case the wheels completely fall off and it takes a long time to get this done. I believe that we're watching an early misstep here in late in the calendar year, where the Congress and the administration have not aligned themselves. I mean, they're aligned. Well, they're not aligned politically yet. They will be soon, but they're making a mistake. And the mistake is, rather than clean up the 25 spending bill and basically clean up, clear the boards for the president and his new program. There's you kind of understand why, but they want to say, well, why do we have to deal with the Democrats and give them a several month victory when we can just wait until the new year and do it all ourselves when we have aligned control? That is the view that seems to be carrying, and so you're going for a short-term extension of spending rather than cleaning the boards. I think that's placing short-term over long-term. This is a Republican opportunity to do something substantial and long. So why in the world do you want to have January and February fooling around with the funding levels for 2024 that only run through September anyway? You're going to have, for example, amendments that don't deal with spending, but they deal with every social cause. Transsexual bathroom seems to be a big one right now. So you're going to have amendments on that in spending bills. You're going to be wasting time on it. It's all about 24, 25 anyway, and you're really blocking up the ability to get to focus the Congress and move forward on these tax bills. I think it's. Well, I'm not going to opine for the Republicans, but I think a better strategy would have been to have gone long term and just clean things up quickly this time.
Yeah, I mean the interesting part, just to note, and we haven't heard this. I'm not making news here, but it wouldn't be unheard of for the government to also go unfunded, right? I mean, we did have shutdowns, and if they think that they're going to have to pay the pound of flesh that they don't want to pay, query, to what extent they say, okay, well, we're going to wait, we'll reconvene and then do a short term even at that point. So that way they don't have to make any concessions. But I guess, Earl, just in the interest of time, I'm sort of interested in your view, which is there any chance that you see a path to bipartisan tax reform in the next 2 years?
Not in a big picture. And that's not just a failing of this present Congress where things really are a mess. I was on the Ways and Means Committee for 10 years. This really does get to where the parties disagree. And the distribution tables, for example, on a tax plan, sharp disagreement between the parties. So the overarching differences prevent a big bipartisan tax plan that the president could be part of. However, there are elements within the taxes, even TCJA, that have quickly generated bipartisan support. I mean, R&D tax credit always had bipartisan support. Jump to the individual tax side, where the Democrats are just crazy about child tax credit in it, and there was a expiring tax provision relative to that. So there are elements of Tax Cut and Jobs Act which passed without a single Democratic vote that within the contents of that big bill, Democrats are quite supportive of.
So then it becomes interesting, Joe. Do we think that the Republicans might think of doing sliver packages? And I remember at one point during the last Trump administration, there were discussions of, do we try to break things off and see if we can get small pieces passed bipartisan, and therefore, in essence, that avoids the reconciliation process. So then maybe we could stuff more in on the Republican reconciliation part, and it didn't go anywhere, right? And so, query, I guess from your side, are you thinking it's going to be the same side, the same dynamics here, right? I mean, in the sense of, as we talked about, it's still relatively close. The Republicans have control, but they can't really lose that many members, whether it be members of the House or the Senate. And so are they going to have this push-pull? Do you even think that there's a possibility of doing like sliver packages on a bipartisan and then a budget reconciliation? Because I can't, as Earl said, I can't see doing a bipartisan broad tax reform.
Yeah, I think the chances of there being slimmer packages that are done on a bipartisan basis are quite slim. Ultimately, even if there is agreement shared by both parties, politically, I don't think Democrats will think it serves their best interest to help make the task of passing these big tax cuts easier, right? And so I think from their perspective, they're going to want to make Republicans own all of it. And so there's very little chance of, for example, Trump on the campaign trail was talking about, whether or not Social Security income should be taxed. That's one thing where if it was going to change, you would think that it would change on a bipartisan basis, because I don't think that breaks cleanly across party lines. Yet at the same time, there's going to be no time to entertain something like that, right? Because Democrats are going to say, "Hey guys, you have this mandate. You claim to have this mandate. You need to then enact some laws and do what you promise your people you do, and we're not going to make the task any easier for you." There's some question, Kevin, and we want to get to this polling question, but about the multiple reconciliation bills in 1 year, depending on what they're touching. I think that's also even a difficult task on that might be slightly easier depending on the task, because ultimately there are a number of Republicans that won't vote, or especially in the House, that won't vote for a debt ceiling increase, right? So unless Trump is very effective in getting those Republicans to change their votes, there's no way to pair those two together, right? And if we're going to have to address it on a party line basis, then there might need to be a separate debt vote. But then the query whether or not you're going to even be using reconciliation, because in the House you're bringing Democrats with you, and then are there enough people that feel like, okay, independent of any sort of craziness that's happening in the tax space, do we ultimately not need to should we not do what's in the best interest of the country and not put our full faith and credit at risk, right? And so ultimately, that's going to be another dynamic that will be interesting to watch play out.
Yeah, so I have an interesting follow-up question, but let's launch the next polling question, which is, what is the likely outcome for most expiring TCJA provisions? And we'll be interested in hearing your thoughts of, is it permanent or extended? But I guess, Joe, two questions, right? Because thinking about it on the Senate side, and you're saying the revenue, I mean, we've noticed, right, that it appears, right, that while I think Earl put it that everyone's looking at their economics and their wallets, and that's really what's key, no one has really paid much attention to the potential deficit implications of the proposals that have been here. And everyone is saying, okay, well, that's going to be huge, right? And so really, from a planning perspective, right, I mean, if we go back to budget reconciliation, can they just do an unlimited budget reconciliation? Can you give like a very high level, how is the cap on the budget reconciliation set? And if we do one budget reconciliation package on taxes, are we done, or can we have multiple packages that touch on tax?
Yeah, so that's a very good question, and ultimately the level is set based on the agreement of in this exercise it's going to be the broader conference, right? But you need ultimately the chairs of House and Senate budget to agree on a top line number, an instruction to give, right? And then pursuant to that instruction, the committees of jurisdiction, right? You can instruct multiple committees, as we've seen at times, like TCJA, they were instructing the energy committees for ANWR and drilling, and to come up with a pay for it there. And you can see outside of sort of the traditional players, there's room to instruct additional committees, but ultimately that'll come down to the number that the chairmen agree on, which will be informed heavily by the broader conferences, right? There's not like, they're not arriving at these numbers, just the two of them sitting down. It's ultimately what the situation will bear. And so Speaker Johnson and Majority Leader Thune, or soon to be Majority Leader Thune, will help guide those discussions and arrive at what is the number the situation will bear. A very interesting thing we're hearing about now, though, is this talk, Kevin, of, okay, even if the instruction is, 4 trillion, 6 trillion, depending on what all you want to cover, is it ultimately going to be measured on a current law basis, right, where it takes into account the expiring TCJA provisions, or is it going to be a current policy basis, which would treat the TCJA provisions as though they continued on indefinitely, and then relative to that baseline, you might not have to pay as much, right? And the precedent that's cited for that is when the Bush tax cuts were made permanent in late 2012, early 2013, the Obama administration, in its deal, agreed to make 80% of those tax cuts permanent, but used the 20% that weren't made permanent and treated those as savings that they could credit, right? And so they created this sort of concept where, okay, just not extending something that we generally would extend is a way to save money, and money that can then be used for other purposes. Now, the big deviation there, though, in all fairness, is, right, that was a very bipartisan process done under regular order, right? Scoring was not at the forefront in the way that reconciliation is. And so it is sort of novel to have this argument now that we're going to need a big number to get this done, right? And we know we don't have the votes that raise taxes to pay for it. And so therefore we have to think of clever ways to even score things and account for things. And so I think we're going to see a lot of tension there. I mean, I think people forget that TCJA, right, it was a $1.5 trillion instruction, but that you had a pairing of ultimately 5.5 trillion in tax cuts with 4 trillion in raisers. Most of those raisers were permanent tax law changes, right? And they're not available anymore. That money has been spent. And so now there aren't the same easy ways to get funding. And ultimately, and we'll get into these specific provisions, but I think much of what Republicans lament, or if they, are being candid today of the features of the TCJA that don't work well are the areas where they had to make concessions to account for reconciliation rules, right? This switch from immediate expensing of R&D to amortization, the phase out of 100% bonus, the fact that you have a permanent corporate rate of 21%, but you have a temporary pass-through deduction of 20%, right? They look at that and they say they've created all these like political problems for themselves because they know that in their heart of hearts, they didn't want those policies to stay. Or to flip, they thought they'd be able to change them and maintain sort of the original opening offer, and now they're dealing with the repercussions of, okay, in divided government, it's complicated, and you can't always cut deals on these things, right? So,
and to that end, the audience only 19% of the audience thinks that TCJ is going to be made permanent. But I guess in thinking this through, and this is. Or we're looking at the various proposals and comparing like current law versus Trump pre-election and Project 25. I want to sort of get a sense of what you're thinking, right? And not on any individual proposal itself, but obviously as part of the run-up to the election, right? Trump was always saying, okay, I'm trying to distance myself from Project 25. The Democrats sort of tried to paint it, I think, of sort as this is really the shadow of Trump, and it was founded by and formed by Trump supporters. You noticed when the Democrats tried to really tie him, all of a sudden Project 25 became really quiet, and now all of a sudden Project 25 is becoming really loud again. There's a lot of places where Trump hasn't spoken, but Project 2025 has. Like, from your perspective, Earl, are you thinking like 2025 is a good place to look as far as if we're trying to read the tea leaves as far as what the Republicans may do? Or is that just like no different than any other think tank and anything, and you don't give it as much weight? So I'm trying to think about, like, from a weighting perspective, do we put a heavy thumb on the scale? Like, is that where the Democrats are thinking, like, this is our worst case scenario, or this is what we're dealing with, or it's just another data point?
Worst case scenario is words that I've heard Democrats use in terms of the election outcome. So we really think we're already in worst case scenario. I think just a few things. I've been making some notes here. I think there'll be multiple reconciliation bills. I think there'll be one to just deal with Tax Cut and Jobs Act. I agree with the audience relative to prospects for making it permanent, although maybe some aspects will be permanent. They made corporate provisions permanent when they passed it in the first place because they were more politically vulnerable. If you had those things expiring, they were unlikely to be made permanent. So that's why they took the 21% rate. That's permanent. Now, will there be some other things they want to take from the vulnerable category and shield them by making them permanent? It's entirely possible, although you do have these scoring complications, and so that's why we're talking scoring games. I love it. You pass something that's not permanent because it scores. It's easier to fund it. It doesn't cost as much. So then you come around the next year and say, well, this is present policy. We're going to count this as the score, and not the present law, which would have this phasing out next year. So it's a scoring game that is just so obvious on its face, but it's under discussion by Senate Chairman Crapo. So you have to take these scoring games seriously. Another one would be there's some number of them. I won't bore you with them. But where this comes in context is this extraordinary debt we're running up at a frightful rate. In 2005, I was in the Congress. National debt, $4.6 trillion. In 2025, it's going to hit $30.2 trillion. The Trump tax policies add $7.5 trillion if all of them would be enacted. And all of them, of course, go well past the Tax Cuts and Jobs Act. He's talking about tip income. He's talking about overtime, talking about Social Security, things that are very popular but quite expensive. And so that I do think that you're going to see, especially as the debt limit vote looms larger late in the spring, maybe a bit of a sobering impact about these broader numbers. You can talk about scoring games and who's got marginal control, and so you can pass stuff. Well, I hope that we all just take a breather here for a minute and start to look at how much debt are we comfortable with the country having. We're really starting to be into uncharted territory. There's two things that have driven it. The world doesn't seem to pause in terms of giving us more money to spend. So the bond, you're not seeing interest rates soar because we have to pay other countries more. We're still the best debt in the world to have. So that has basically removed a discipline from the legislators. They feel they can spend what they want. You didn't hear debt and deficit in this campaign by either party. It's just not been a political concern, but it's getting to be substantively a concern.
Right. Well, I mean, it is sort of interesting, right, that China is one of the countries, right? We could see on the slide that he's talked about importing a tariff of 60% on China, and China is the second largest country that has U.S. paper. So it is really an interesting dynamic. But, when you think of it, Trump's policies, you can actually see him enacting some of the revenue raisers in the name of what he does, right? In the sense of, if you think of what he wants to promote is everything is in the U.S. Well, then if you think of the BEAT tax, the base erosion and anti-abuse tax, well, that sort of dings you for having outside of the U.S. And so as a result of it, you could see him increasing that, which is sort of contrary to Project 25. We've talked about in the past, the implications of not adopting Pillar 1 and Pillar 2, and Pillar 1 is the digital sales tax. Pillar 2 is actually more fascinating because some countries are already starting to adopt this. And, if the U.S. doesn't adopt Pillar 2, which it doesn't seem like they're going to under the Trump administration, and we have this CAMT, which is the corporate alternative minimum tax. Who knows if we're going to keep that under the Trump administration. But either way, other countries can say, oh, well, in the U.S., you're a low tax jurisdiction or your earnings aren't subject to the minimum tax. And so indirectly, you're going to be subject to this tax. Now, I guess, Joe, reading the tea leaves, like, do you think that how much of that is going to upset the Trump administration and that, okay, it's really not the U.S. earnings because the U.S. company doesn't have to pay it, but it really is the U.S. earnings that are being subject to this tax. It's just the foreign entity. And so will the Trump administration really care because it's the foreign entities and he doesn't like them in the first place?
Yeah, I think ultimately Republicans are going to want to address any perceived discriminatory or extraterritorial taxes. I think just from even if at the end of the day, I think a lot of them, and going back to this point about sort of the fiscal issues at hand, I think any money being collected that they deem to be their money, right, they're going to want to hold on to it. And so regardless of whether or not ultimately companies are potentially being punished for acts that punished, I'll use that in quotes, but for acts that the president doesn't agree with, I still think he's going to really want to have a handle on U.S. revenue and protect our existing tax base. And so I think that's why you're seeing a lot of talk, at least in the Ways and Means Committee, about some of these proposals in the event that UTPR is being levied against U.S. companies, right? The Chairman Smith has a bill that would ultimately increase taxes on wealthy foreign investors and corporations from these jurisdictions that are imposing unfair taxes, starting at increase it by 5% a year, ratchet it up potentially as high as 20. And I would see something like that being included in the bill. Now, the interesting thing on some of these proposals, right, is JCT generally doesn't treat legislation as a trigger, as though the trigger has been activated, and so you're not really getting any money. But I think just as a matter of protecting the U.S. tax base, lawmakers will want to see this. I also think Republican lawmakers feel quite comfortable that with Trump in the White House and with the uncertainty associated with how he may respond to some of these things, that it will have a chilling effect on retaliation. And if anything, it may force some of these nations to revisit their political calculus and try to make up for revenue shortfalls at home in other ways. But a lot of this is going to take a very long time to play out. And I think ultimately the Trump administration is not going to be comfortable making further concessions, and I think OECD members are not going to be comfortable giving Trump what he wants, and so we are at a bit of a stalemate here.
Well, and it's really interesting because when you take a step back and you think of what Trump has said and what he's looking for, it really feels to me, and I've had several conversations, most recently on a supply chain call, where Trump's policies are going to impact taxpayers differently, right? In the sense of foreign parented companies that have U.S. subsidiaries are going to be rewarded for actually having the U.S. subsidiaries versus U.S. parented companies that have foreign subsidiaries are going to really be dinged. And it really is just a fascinating dynamic. If you just really look at it from that perspective, it's sort of like what is my organizational structure? Does that even make sense, right? In the sense of, look, most of my operations are in the U.S. What do you want me to do? But if I do that, now I have a foreign subsidiary that's bad, but you're telling me, hey, if I'm a foreign parented group and I have a U.S. sub, I won't be as negatively impacted. It really has this weird dynamic, but no one is really looking at that construct and how it can impact like inbound, outbound, and overall structuring.
Yeah, no, I think that's
I think we've seen some things, Kevin, that show there's tax policy theory and there's global political reality. So the global min tax, that was kind of a bold initiative early on in the Biden administration. They've done next to nothing relative to Pillar 2, other steps that they would need to take to really put the United States on that track. And that was before we have the incoming protectionist flavor that's very much part of the new incoming administration. My thought is, what do we know about President Trump? He certainly likes leverage, and he uses it aggressively. So I think that you're not going to see many foreign capitals right now working under the the OECD program and the rules that people have agreed to. I think that anything that would disadvantage U.S. companies by way of unfolding tax policy initiatives in foreign capitals are going to result in a big smack in the nose with a retaliatory response of some sort by this protectionist administration that's, on the other hand, quite aggressive about making sure that it doesn't get pay a price for its policies. Now, where does that get us? Probably in a trade war of some sort, and probably pretty quickly. But that's how it's going to fold out, in my opinion. The theory about we're going to have a global world order and it's going to be tidy, we're going to agree on this jurisdiction shopping by having a minimum tax, I think it's all giving away to really hard politics driven by a America First agenda of the new administration.
Yeah, and I guess, Joe, while they're answering the last poll question before we turn it over to Nate, obviously the Trump administration has a whole bunch of priorities. We already talked about them. What do you think? What's the key takeaway you think we should be looking at, knowing that the Trump White House is going to be in full swing in short order?
Yeah, I think what I'm watching closely, and I think what a lot of people are watching closely, is nominations to these key positions, right? Like, what can we glean from ultimately who Trump decides to nominate for Treasury Secretary, for example, and ultimately, is that going to be a signal of business as usual? Should it give us some comfort that ultimately the people there understand how big the real world operates, how big businesses operate, and ultimately they're going to act as sort of a constraint, a force for good in this broader project, and ultimately pass probably some helpful tax cuts and additional tax policies that will be widely beneficial to the business community? Or are some of these nominations going to lean into Trump's worst instincts, right? And are we going to see policies that are sort of counter to our growth, are damaging to our growth, and are ultimately going to sort of exacerbate this deplorable, horrible economic situation Trump thinks we're in currently, right? Is he improving it, or is he going to make it worse? And I think, reading the tea leaves, looking at who's appointed, we can see ultimately, where we're headed. I think regardless, we can expect great movement and change in some of these tax provisions, and so it's gonna be an exciting year. Obviously we're all watching it quite closely here in Washington, but I know taxpayers and tax professionals across the country are watching closely as well.
Well, Joe, Earl, thanks so much for joining us again. Nate, what should we see on Answer Connect as we're preparing for the next administration? You're on mute, Nate.
You're muted.
All right, there we go. Should be on mute now. So thank you so much again for the discussion there, and spend a little bit of time just kind of walking through how you all can use Answer Connect just to stay on top of all of these developments that are going on in the world, because CCH Answer Connect isn't just a great resource that you can use to find out answers to things that have already been passed or have already happened. It's also a great way to stay on top of new developments as they're progressing through the legislative process, like we talked about here on the call. So what I'm going to do is pivot over and just show a couple of different ways that you can use Answer Connect to stay on top of legislation as it's working its way through the process. So the first way that I'm going to show you is we have a tax tool. So I'm in Answer Connect here on our federal tax tab. If I launch our tax tools page, one of the key things in here is the tax tool for bills worth watching. So this Bills Worth Watching page is organized by the different congressional sessions that are out there. So if we were to go back into the 115th Congress, which is the Congress in which the TCJA was originally passed, we can take a look at a lot of the progress that that our editorial team was monitoring this bill as it was kind of working its way through the committee inside the House. What was the form of the bill at that point? What was the form of the bill that went up to vote in the House? What was the bill that was passed in the Senate? As this went through the conference committee reconciliation process, what did that refined bill look like? And then eventually what was signed and passed into law. So our editorial team here at Wolters Kluwer stays on top of these developments on a day-by-day basis. and keeps track of them and then publishes out regular developments in our news section of Answer Connect to keep you up to date with all these different tax laws as they're being passed through Congress. So that's the first thing that I'm going to mention there. If I go back into my tax tab again, actually, in here, in our bills worth watching section, I'm actually now going to take a look at, actually let me show you this here because I don't think the screen duplicated that over. So if I actually open up the smart chart here and I go into our 115th Congress, and I go down into the TCJA and then look at the results, you can again see every single basically update that this bill made as it was going through the committees in the House, what was passed by the House, what was in the Senate, what was in the conference committee report. All of that's tracked, all of that's managed directly here inside of Answer Connect, which is a really, really powerful thing to have going. So now we'll take a look at some of the updates that we can also do at the basically at the topic level. So a lot of these initial, or that Bills Worth Watching page is structured very much around just the text of the law that's being passed. But as we know, when laws are passed, they actually include a variety of different tax topics inside of those individual bills. And that's where on the news tab inside of Answer Connect, we actually take a look at all of the law changes that are happening on a daily basis inside of Congress. And we break those out into a variety of different, what we call client impacts or topical impacts. And what this is intended to do is actually take the text of a lot of those laws and then translate them into specific topics pages that really talk about what is going on inside of that law and lay it out in a little bit more of a user-friendly, almost what I describe as like a Wikipedia-style overview of what's going on inside of that law. So you can see we actually have the same timeline of basically the underlying legislation that supported this tax topic. And you can see this one was tied to the CHIPS Act that was passed back in 2022. And then you can see how it developed from the law that was passed into the regulatory process and then ultimately into the Treasury decision that was made just a few weeks ago here. And this topic, again, is laid out in a very easy to follow manner. You have just a high level overview of it. You have a discussion of which types of customers or clients or business entities are going to be impacted by it. Again, you have the effective date that this thing took place, and then we also have our other related and recommended content, as well as links to the underlying law that this was built on, and some of the different forms that have been published that are going to be used to carry this out. So we also have that out there as well. And then the last thing that I'm going to show you is something for customers who use not just Answer Connect, but also our CCH Access Tax product. We have a one step further take of this that actually takes you into a product called CCH IQ. And what we do here is we take that very same underlying topical event that we talked about. So in this case, it was the recapture of the advanced manufacturing credit. You can drill into that individual topic, and again, you get that same topical overview, but we also are able to go into your CCH Access tax return data and actually pull out a list of affected clients that are likely going to be impacted by this particular topic or this particular legislative change. Again, our editorial staff does an excellent job of not only understanding what's going on with these different topics as they're working their way through Congress, but also we take a look at what are the different signals, or I describe them as hooks, that we would look for in the underlying tax return data that we have inside of Access Tax. And we're able to pull back what we think is going to be the clients that are going to be most impacted by this particular change. And we're able to pull all of that data out and give you a good sense of, hey, when this particular item passes or when it becomes law, these are the clients that you're going to have that are going to be most likely to be impacted. And you're able to kind of tailor your responses specifically to those clients by just kind of looking at that individual client list there. So I'll take a quick preview of what that looks like here so you can see that as well. So we're able to go from the event description overview into the actual list of the clients and IDs inside of Access Tax. And we also pull out a variety of different items from the tax return for you to take a look at. So what is the overall like net income or loss? What's their NAICS code? Any investment credits that they already have, and all of that information is listed here in a grid so that you can easily export this out into Excel and understand which clients are going to be impacted by those changes. So again, that is, I think, the big takeaway around basically how Answer Connect can help you as we're kind of going through this period where there's going to be a lot of changes in underlying tax laws. Just be aware that our team here at Wolters Kluwer is staying on top of what those changes are every single day. And we are updating our content and updating you all every single day based on the developments that are going on out there in the world so that you can make sure that you are staying on top of these changes and delivering the maximum impact for your clients. So that's what I have to wrap up with for today. Margaret, I'll hand things back off to you to close us out.
Okay, thank you everybody for participating in today's webinar. CPE credit will be posted within 2 to 4 business days. You will receive an email with a link to the course evaluation and your certificate of completion. Today's webinar has also been recorded, so you will receive an email with the link within 24 hours. Finally, please fill out this final poll question if you would like to learn more about CCH Answer Connect. We thank you all for attending and hope you have a great day and a great weekend.